on behalf of the IIA General Council and then the IIA Ghana, webinar is the fourth in the series organized by IIA on topics that have been selected carefully, and it is to assist participants of the IIA affiliates to gain deeper knowledge and understanding in the chosen areas prior to the main conference scheduled for May 2023. The topic for today's discussion is on effective review and audit of contracts. But before that, let's take note of these few protocols during this session. Participants, we advise that we mute our respective microphones and off our videos to minimize interferences during the presentation. We should also note that provision have been made for presentation. The alternative is for you to indicate your question, if any, using the chat box as appropriate, and you make sure the presenter gets it and answer the question. After the session, we will have the opportunity to listen to an update on the upcoming IIA conference in May to be hosted by IIA Ghana. So on that note, he is in the person of Mr. Eric Yankah. Mr. Yankah is the immediate past chairman for IIA. He is also the founding member of IIA Ghana and a past president. Apart from Mr. Eric's Yankah's knowledge in internal audit, he's also got a number of experience in management and leadership, and he's also an expert in procurement. We are honored to have you today to share with us on the topic effective review and audit of contracts. Thank you very much.
Thank you very much, Omari. Can you hear me clearly?
Yes, we can.
And can you see my screen?
Yes, your screen can be seen.
Thank you very much for joining this discussion. I'm just going to go through some key highlights. This topic is a topic that would normally take about 4 days of critical review by internal auditors before they can understand exactly what they have to do. But given that we just have an hour, but I'm sure the working document that I will leave behind and share through IIA Ghana would make it easy for you all to understand exactly what we'll be talking about. You would realize that I will be speaking interchangeably between projects, service contracts, regular contracts, IT contracts, and the like, because all of these that make them interesting for review in their own context. But because we come from different business backgrounds, I would do, if you will, a hybrid of all these types of contracts and look at how we can effectively review them. Can you? Okay. So let's begin, first of all, by just checking exactly what it is that we want to do. And what we want to do has more to do with what is it that we are chasing after. This is a building in Nigeria that I found interesting, but that's not the central part of the discussion. The discussion is that you can build whatever pleases you, but do you have a contract that can deliver the right way, safely, within budget, on schedule, and to specification? And so one of the key fundamental issues with contracts is ensuring that at the end of the day, whatever it is you are looking for is what you are getting. And there are normal challenges with contracts when the players who negotiate the contract then troubles that are to be obtained from the contracts. That being so, when the contract has been executed and is now handed over to implementing agency, then the implementing department or agency or officers now have a challenge interpreting the contract to ensure that it meets the expectations of the in this context, which is the general auditor's expectation, is to look at sources of threats to the company or to the business, any objects of threat in the contract by way of any unforeseen liabilities or incipient liabilities, whether there are any issues that would require early detection. For example, there could be a clause that talks about law, that if there's a change in law, it does. So if there's a change in law in the country, and you have a contract with somebody else where you've said the change in law, you've agreed to a term in the contract that says, when if there's a change in law, it doesn't affect us. It means you are building a liability for something that you are not aware of. And so it's important that you do have an early detection and warning system. And of course, sometimes also because of the nature of delivery, which can be filtered through a contract, through a phantom billing, a price padding, and so on like that. So we'll be discussing all of these within the short time that we have. Now, for any contract, the auditor's role is to ensure that three key items are available. The first is that there must be performance and delivery management. So into the field, you need to find out who in the department or in the office or in the company is managing that contract. Number two, are they aware of the actual deliverables, and do they have the tools to measure or assess the deliverables? And then if there are any ways of improving the contract, are there provisions in the contract that can allow for performance improvement? Or are there any things we internal auditors within your own institution that can help manage the contract and bring value, further value to the institution? And that means that an auditor must be fully aware of not only the terms of the contract, but the purpose for the contract. Sometimes at the beginning of a contract, you find the preamble that states the purpose of the contract, but then there could be further documentation. Say that it is important for internal auditors to look at these four key risk-based approaches. If you're going into for a contract, start off by assuming that there are vulnerabilities that you may find in there. And I'm saying this because it matters who draws up the contract. Many of our institutions, when we have a contract to sign, we let the counterpart negotiate the contract. And so it means that you are going to start from a position of weakness sometimes. So if you are the firm, it's important that you look at who started the drafting of the contract. Was it drafted from your end? Of course, that does not mean that the fact that the contract was drafted by you excuses you ability in-house, and therefore either that or poor negotiating skills, and you could therefore end up with features of the contract that are not necessarily favorable to you. And so that type of risk-based approach is how you need to look at it. Now, all auditors know this simple process. You must enter, if you're going to do a review, plan, assign. I'm not going to go too deep into these ones, but it's important to understand that at the end of the day, the fine print associated with all the documents pulled up in connection with the contracts are important working papers to familiarize yourself with. You cannot review any contract when you are not familiar with the fine. In the same way, when we go out to review a contract, it's important that our report only features the facts and avoids conjecture. Meaning, if you are not clear about something, you would need to follow through on that. I'm setting these preambles up front so that when we go into a bit of more technical detail, it will be easy for us to understand. Different institutions come in different colors. There are institutions that are dealing with multiple clients and therefore they have multiple contracts. There are institutions dealing with one project with several subcomponents that have, again, multiple contractors. We also have institutions where there are single contractors or even maybe a couple of contractors on contract. And then there could be partners, especially those who are in joint ventures and so on. Each of those partners comes with its own rules and procedures. And so you will not find one common language when it comes to contracts. So the situational or the contextual processes associated with the contracts are very important for all internal auditors to gain a lot of familiarity with. Now, project sometimes we talk about contracts, sometimes we talk about projects, and sometimes we talk about auditing projects, sometimes we talk about auditing contracts. Whichever way it is, in plain English, you can say, well, a contract is a document, but a project is a physical development. Either way, the basic contract document behind it. And so as internal auditors, sometimes we fail when we approach a project, or we fail to translate a contract into project language, or we fail to translate what we are seeing and relate it to the contract that is before us. Of course, not every auditor can read drawings if it comes to projects that are infrastructure projects. Project, but say electrical projects or flow diagram type projects, where you have charts with unfamiliar symbols and so on and so forth. But that is why internal audit is allowed and must also have professionals to support them when they are doing reviews of certain technical contracts and documents or projects, so that at the end of the day, you have the right skills to be able to attack or attempt to review the contract or the project as the case might be. Because the project may be going on smoothly to your naked eye, but it may be going on wrongly per the contract. And that's why there's that difference that we need to look at. Now, a set of documents that helps us to build and deliver specific or specified deliverables. And then in accordance with specifications that have been set out in the contract or the document that relates to the quality, the timeliness, the funding, and all other conditions or associated with the service to be delivered. And so our now, obviously, it brings together people, resources, and all of that. But at the end of the day, nothing is more important than the paper that is left behind called the contract. And therefore, again, like I said, if you don't have the background to it, then you have a challenge trying to rebuild the thinking of those who negotiated the contract in order to see whether the contract, because contracts are seen more as documents. It is not every contract that delivers tangible products. Some contracts deliver intangible products. For example, it could be a skills training contract. Unless the people who participated in the training come back to apply the skills they learned to improve, well, you went to Yankah Institute and therefore you must be bright. People come out and still look stupid. And so it's important that the broad philosophy behind this, even if the products are intangible, we can see and have measurement tools to look at that, which we'll talk about shortly. I'll go on straight to look at contracts, types of contracts. There are several of them. Engineering contracts, turnkey contracts, supply and install, supply only, followed by a separate install contract, supply only with self-installation. You go to a shop, you buy, you sign a contract, or you may not even sign a written contract, but you may be given a receipt which says goods taken out cannot be returned under any circumstances. You go to some shops and they say, exchange for goods or something like that. And then you have, for the IT side, you have customization and parameterization, where you buy a broad software and you customize it to suit your needs, or you just fill in parameters, sex, age, things like that. You just fill in and then you set the system up. The contract could be a consultancy assignment. It could be a retainer contract. And it could also be, there are several contracts in the business world which are success-based. That is, you come in, you offer them that will help you to win X, Y, Z, and at the end of the day, we will, if we succeed, we'll get our 10%. If we don't succeed, too bad for us. So you have all these types of contracts and more that we can look at and deal with them. Now, of contracts. If you are not aware of these, then this is the time to understand that for different types of contracts, there are some contracts where the service charges are based on the cost of the labor and other service charges. For example, if it's a legal contract with a law firm, they will charge you for labor based on hours spent, deliverables, or expenses. You also have contracts where the contractor is charging you, he delivers with his own money and he charges you cost plus a margin. The margin may or may not be incorporated in the agreement, but even if it isn't, it is a cost plus margin contract. Then you have for construction where there are unit rates that are agreed, and these unit rates usually will appear in bills of quantities done. And once you measure the work that has been done, you put the two together and you have a value to charge. Then you have contracts that are also fixed sum or lump sum contracts. Some, when you say lump sum, you are paying me everything today and I'll do the work for you. You also have fixed sum that may or may not be escalatable. That is, there's no inflation index associated. That you want to look at is what is the contract cost structure? And that's one of your first parameters that you would also begin to assess. Now, it depends on another item, and that item is that is the contract you are working on a contract that is related to a portfolio, a program, or a project. Now, of activities that you are embarking on. You are doing an innovation program in your company, and there is a little bit. Did somebody interrupt? I think Matthew Dakbal is okay. So you have portfolios, programs, or projects. So the portfolio may involve a number. During COVID-19, we would have had a portfolio where there were several interventions, and each of those interventions could stand on its own. That's where you have programs. But within the programs, you can also have projects. So that if it is a contract at a very high level, then you also need to understand the dynamics of those in order to be able to audit them. Now, it's important that, like, dealing with. If you are not familiar with it, you might look at it as a single activity, whereas it may be a program. Or you might look at it as a program, whereas it may be a portfolio. So that understanding should be something that internal auditors need to be aware of. The other key element with contracts, I'm sharing my screen very quickly so that I can quickly go through the material. Know who the sponsors are. It's important, like I said at the beginning, who the deliverables or what the deliverables and quality expectations are. And if you have anybody who is managing the project, it's important that they can produce a Gantt chart. Now, there are many free tools that are available for auditors to use when they are reviewing projects. Is on course, it is not exceeded its time. It is possible, for example, that the overall contract is on time, but there may be several areas of the contract that are on critical path. And so don't be fooled sometimes when you are told that, oh, the thing is next year, October, and you are happy with it. You may have to go in and see what the contractual provisions were for the delivery of certain components. It's meant to avoid critical path issues. Now, when you have a critical path issue on a contract, it means that particular area is on a risk watch, or it is on a very tight schedule, and its derailment can impact on the overall delivery of the contract. Now, associated with that, another key element is that you want a contract where there's very little variation. Variation is instituted at the beginning of the contract, or in terms of the definition of what is to be done. And then just as the contract starts, oh, let's add this, let's add that, let's add this. Sometimes that is used as a means of breaking the cost barriers. By this I mean that I will give you a cheap contract at the beginning within my powers, and then when you are doing contract management, one of the key things to watch out is midstream correction and variation orders, because sometimes through variation orders, we can double the cost. And maybe if we had given it to another vendor who was going to charge 40% more at the beginning, we would not have had this variation issue. And so it's important that you look at the genesis of, or the reasoning and the veracity of variation. Another thing about contracts is that, especially contracts where it's field work related and people have to go to the field, you rely on the field officers to come and tell you X, Y, Z has been done. Now, in some organizations, the internal auditor must certify the works before it is paid. But I sometimes question the competency of the internal auditors to review such works to guarantee or to certify that stones have been poured onto the road for a payment to be made, or the thickness of asphalt is 4 centimeters instead of 2 centimeters or instead of 10 centimeters. So it's important that we look at that. And of course, all of this means that you must be clear in your mind what the concept was. Contract, and then match that through your conversations with the contract managers, what is actually being done on the ground. Now, sometimes the how becomes important when you are reviewing contracts. What was the methodology that was agreed? In some contracts, the methodology to employ is incorporated in the contract. In others, it isn't. For strategic reasons, some institutions don't bother. For other companies that have been burnt once or twice by certain types of contractors, they insist on knowing the technology and the methodologies to employ, and they insist of the deployment of that. After all, they would have charged you or given their reason for their pricing on the basis of the methodology. And therefore, if all you are interested is in the end product without a review of the methodology to be used, then you have a challenge there. Then when, who and what should be done at what time, and what was there at the beginning of the contract. This takes me back to the point about understanding Gantt charts and project schedule sheets. So there is the software like Open Gantt, Open Project, and so on and so forth that you have to use, because the others that are well known, like Microsoft Project and so on, they don't come cheap. But there are open source software that works on both Macs, Chrome, or Android phones, Android computers, as well as the Windows platforms. Then resource utilization. You cannot give a contract when you don't have all the money or when you've not planned your cash flow. And so it's important that you also look at us from a company perspective, following there. And then, of course, now that you are the auditor going in, your evaluation includes the monitoring and evaluation of the project or the contract by those in charge. And you are going to look at what they actually do and how they report their M&E. And finally, if the contract is over and you are doing a review of the contract, then you'll be looking at its post. Now, for projects have a long lead period, and generally the contract can be intervened or reviewed in various stages of the project. Even project inception, the inception report that is produced sometimes gives a good idea as to what the project ought to be and what the contract is all about. And as you go through the various stages of project development, up to the time of handover to client, you ask yourselves the question of what was proposed for project inception and what was closed out before handover to client, and what has been assessed to be remedial. Close are they? Sometimes you have a project that is closed out, and for a year or 2 years, remedial issues are being reviewed and fixed to no avail. And so at the end of the day, you wonder whether it was due to poor project management, poor contract management, poor delivery by the contractor, or poor oversight by the client. And so all of these stages are important stages for your timely intervention and review. I also say this, and this is something that I keep saying to my auditors, that whatever we do, it is important that our review of contracts is meant to create and bring value to our institution. For that, that we uncover all the issues that we see, and then we enable our clients to have necessary time to reflect on what's gone well and what needs to be improved with the project. Just remember just the chart that we went through a few minutes ago. Now, let's be very clear. Audit review of contracts is not a substitute for the actual continuous operational review by the technical teams or management. You don't work on contracts. You, as internal auditors, you don't work on contracts. You go in to review in order to provide assurance to management that all is well. And therefore, when you go in, you should see that there's adequate project review and oversight by those. That's what you have to do. Because if the contract is being managed well, when you go in to do your contract reviews, it will be very easy for you to provide the assurance to management, because you only may not do 360 or 365-day audit review of contracts. You don't have the time to do so. And many of, if you will, a selection of projects or contracts to do a review in, but be biting enough to put people on their toes that there are people who can come and review our audits, as you know. So we always ask ourselves, at the end of the day, the simple question that the audit review is going to give us is that, are we getting? If you look at this chart, which I pulled from the internet a couple of years back, you can see it's very complicated. And you can also see that it looks impossible. Is that what we wanted to build? Are we being cheated? Are we being given the wrong thing? Those are the areas. As an auditor reviewing, there's that absolutely need to confirm that what was ordered is what will be delivered and being delivered and has been delivered. So the core objectives of our review of audits is that there is in place adequate systems to ensure delivery and due compliance with contract terms, that we are paying a fair price, that the or not, but whether there is a proper clarity on the interface boundary between value for money or value for addition to the business. Now, reviews, like I said, are to be done by the people working on the projects. So they have to have 100% coverage. We must strategically time our assurances, and that could be technical assurance, risks, value for money, or even investment rationality. And the choice of audit, the timing of the audit becomes critical for us. That is why when you go in to the contract, it's an important time. If you go in at the stream and you notice problems, it is easy to have corrective measures designed and brought in. But if you go to the end, if you go in when the contract is ending, to do any corrective measures following your audit will involve plenty money. And I don't think you will then be adding much value. Not that it's not important, but it becomes a risk that we have to look at. So value for money is important, but I also add one thing. Sometimes value for money is assessing whether the money is being spent or can be spent properly. But I also add cost effectiveness. You see, you can see that there's some value. Can we mute Madam Kujo? Can we mute Madam Kujo, please? Thank you. So value for money can be an isolated issue because it can be looked at in isolation. Is this thing valuable to the business in terms of, is it worth the money being put in and so on? But cost effectiveness looks also at alternatives of difference between the two. I would combine both, and I'm saying that our contract review must not only search for value for money, but must also search for cost effectiveness and alternate implementation alternatives. And what are some of the issues that are of interest to us for contracts? We may be interested in controls within the contract. We are also interested in financial management within the contract. We are interested in risks. We are interested in the quality management and then delivery. These are key areas. Sometimes we include the procurement and contracting, but that's usually because once you sign a contract, unless you assume responsibility for post-contract procurement, you allow the contractor or the vendor to handle those things. It lessens your burden. What are the tools that you need? For me, I say visit the project. Get educated. Don't just be an auditor, but be an informed internal auditor. You need to understand project management tools. During question time, I'll see if I can find one or two tools to show you that are free to use. And then also your simple spreadsheets and word processor to capture information that you go into the field to collect. That helps. You all have you do have any of these audit, electronic audit tools, of course, you can apply them. But for me, the most important thing is that if you really want to understand contracts, then you must understand some basic project management tools. Delivery, and these are some of the contract areas that we want to share with you. In the first place, ensuring that conformity with the laws and regulations. The timeliness, we've talked about the reasonableness of cost. And then also whether your organization or both parties or the counterparties to the contract are applying and utilizing the contract terms properly. Then also whether the resources that are specified in the contract are being utilized. Of course, ethical action to tackle. Some of these happen at the beginning. It's difficult to find evidence for, but you can always also tell that a contract that keeps changing hands through false billing, phantom costs, selective payment. Some contract, there may be several contracts in place, and some contractors get their monies paid earlier than others. Those are some of the corruption risks that you want to look at. In terms of contract management, the bounds that we need to look at sometimes is the supervision. And some contracts also talk about HSE, health and safety and resettlement issues, but they do not apply them, and they tend to let the cost of these become, let's say, my organization, and we have a contract, and these people are supposed to do A, B, C, D, and they don't do it. Now, because they are working as contractors for us, and we are known in the community, we have to end up bearing the cost, even though it may be specified in there. And so if there are no provisions in the contract against buyback, or let's say deductions, or deductions from their you are bearing double cost, because they will still charge you for something that they are not doing. Done this one already. We've talked about this. So what's in the pot? And we just have about 10 or so minutes. What's in the pot? Do we